Big bets are back. From boardrooms to startups, companies are making aggressive moves despite policy fog and market uncertainty. Global M&A is surging, Africa's tech scene is heating up, and earnings are drawing sharp lines between those stuck in the past and those racing toward the future. My name is Eniola Lunge, and here's today's Zoom Out for August 4, where I help you see the bigger picture. Corporate appetite for growth is surging, with global mergers and acquisitions reaching $2.6 trillion year to date, the strongest pace since 2021, according to reporting from Reuters. This rebound is being led by companies doubling down on AI, digital infrastructure, and strategic consolidation, even as tariff uncertainty clouds the outlook. A standout example is T-Mobile's $4.4 billion acquisition of U.S. Cellular's wireless business, a deal that includes customers, stores, and a large portion of valuable mid-band spectrum. The transaction reflects telecom's race to scale up ahead of next-gen tech rollouts, including 5G and AI-powered connectivity. So what's your Zoom Out takeaway? Despite regulatory risks and interest rate pressure, the M&A boom signals that companies are no longer sitting on the sidelines. They're making bold bets to stay competitive, especially in fast-moving tech sectors. Tesla's board has approved a $29 billion stock award to CEO Elon Musk, a move seen as critical to retaining his attention as the company shifts towards its long-term moonshots, robotaxis, and humanoid robots, according to reporting from Reuters. Tied to performance milestones, the award revives a similar package that had been challenged in court and underscores Tesla's reliance on Musk's vision to lead through an evolving mobility landscape. So what's your Zoom Out takeaway? When a board gives its CEO one of the largest pay packages in history again, it's not just a retention strategy. It's a signal to investors that the future of the company is the founder's vision. But tying valuation to speculative tech like robotaxis is a high-risk, high-reward game. Earnings continue to paint a split screen. Berkshire Hathaway reported a 4% drop in operating income and took a $3.8 billion write-down on its Kraft Heinz stake, sending shares down over 3%. The results renewed concerns about legacy investments and Buffett's pending exit as CEO. Meanwhile, Tyson Foods raised its full-year revenue outlook after strength in its chicken and prepared foods unit offset weaknesses in beef. IDEXX Laboratories outperformed with strong pet sector demand, raising guidance after beating forecasts. On the flip side, Figma's IPO fizzled, dropping 16% after early enthusiasm. On Semiconductor disappointed with soft guidance, while Spotify jumped 7% on improved user growth and sentiment. So what's your Zoom Out takeaway? The gap is widening between companies navigating change and those stuck in legacy bets. Earnings aren't just quarterly scorecards. They are signals of who's building for what's next. Africa's startup ecosystem gained real momentum in the first half of 2025, raising $1.42 billion across 243 deals, a 78.3% increase over the same period in 2024, according to Tech Cabal Insights. Investors are doubling down on early-stage fintech, enterprise software as a service, and auto tech, backing founders with strong unit economics and scalable models. The growing use of debt financing signals smarter capital use and tighter equity control. According to Tech Cabal, layoffs and startup shutdowns have slowed, and more businesses are pivoting to partnerships. For instance, telco fintech collaborations are becoming more commonplace, helping founders expand rapidly and efficiently. These trends point to a more resilient, interconnected ecosystem poised for global relevance. So what's your Zoom Out takeaway? Africa's tech trajectory in H1 of 2025 wasn't just about more money. It was about smarter, more strategic investing, tighter consolidation, and startups transitioning from early promise to real-world scale. The ecosystem is recalibrating itself for sustainability and impact. Despite recent signs of diplomacy, global trade remains under pressure due to renewed tariff threats, especially from the US, targeting goods from many of its trade partners. If implemented, higher tariffs could slow down cross-border commerce and potentially stoke inflation, adding friction just as central banks begin weighing rate cuts. So what's your Zoom Out takeaway? The rules of global trade are being rewritten in real time. Investors and exporters alike must prepare for a world where tariffs aren't just tools of punishment, they are negotiation chips in a larger economic power game. So the bottom line is this: whether it's Musk chasing robotaxis, Berkshire clinging to craft, or African founders scaling with lean capital, today's news shows one thing: vision, not size, is what sets winners apart. In this cycle, agility beats legacy. The global economy is entering a phase of strategic realignment, not blind expansion. What story stood out to you today? Drop a comment, share your perspective, and don't forget to subscribe for more global context with Zoom Out. When the world zooms in on the noise, I zoom out so you can see the bigger picture.